Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden language of big business, and today it looks like Bank of America Corporation, or BAC, as you probably know them, is getting ready for something. What exactly that is? Well, let's find out. If you like getting the real story behind financial filings, make sure you're subscribed. And hey, we've got a great community discussing these reports over on our Discord channel. Link in the description. So, what we have here is a Form 8K filing. Think of this as a current report that companies have to file when something significant happens that investors should know about right away. The date here is the 16th of October 2025, so this is pretty recent news. This document is a notice to the world that the Bank of America Corporation is reporting some kind of event. The main item here is related to financial instruments, specifically notes and preferred stock, that they are registering to offer. Now, this part is interesting because it lists out a whole bunch of things the company has already registered to trade on stock exchanges. It is like a menu of what they offer to investors. We see their common stock, the BAC ticker, which is what most people buy. But then it gets more complicated with various series of preferred stock, like Series E, GG, H, L, and so on. These are like special kinds of stocks that often come with fixed dividends and different rights compared to common stock. They also have these things called depositary shares. Basically, it means owning a tiny piece of a preferred stock. And then there are even more complex things like income capital obligation notes and senior medium. Term notes, these are all ways Bank of America raises money from investors. It's like a whole buffet of financial products. The most important part of this filing in terms of what it is right here. This tells us what is being included with this report. This section explains why this report is being filed. Bank of America and its subsidiary BOF Finance have previously filed a big registration statement. Think of a registration statement like a prospectus for a whole lot of future offerings. This current 8K is an update or an addition to that. They are registering more medium-term notes, which are basically loans by investors to the company for a set period. Some of these are backed by guarantees from the main Bank of America Corporation, meaning if the subsidiary can T-pay, Bank of America will. And this is key. They are filing legal opinions from a law firm called Sidley Austin LLP. This is basically the lawyers saying that all these notes and guarantees are legally sound and valid. It is a stamp of approval on the legality of the financial instruments. So, the main event here isn't T a financial performance report like you, DC, in a 10Q or 10K. Instead, this filing serves to officially attach or reference a legal opinion about new debt securities they are planning to issue or have issued. It is more about validating the paperwork for their borrowing activities. And of course, we have the signatures. This is the official sign off from the company confirming that they are submitting this report. Rossi Jeffries Jr., the Deputy General Counsel and Corporate Secretary, is the one signing off here. Now, what does this all mean for Bank of America and for us watching? Well, this isn't a tier report showing how much money they made or lost in the last quarter. It is not about their profits or their consumer behavior. Instead, it is a procedural filing. It's essentially saying, hey, we've got our legal ducks in a row for these Series P notes and Series A notes. From a big picture perspective, Bank of America is constantly managing its capital structure. They issue common stock, preferred stock, and various types of debt like these medium-term notes. This filing tells us they are continuing their strategy of raising funds through debt. This is a standard practice for large financial institutions. They need to borrow money to lend it out, to invest, and to operate their massive business. The fact that they are getting legal opinions from a reputable firm like Sidley Austin LLP is good hygiene in finance. It reassures investors that the securities they are buying are legitimate and properly structured. It reduces the legal risk for potential buyers. There are no direct financial numbers like revenue or profit in this specific filing, which might make it seem less exciting. However, it is part of the ongoing plumbing of a giant financial institution's operations. It signals that Bank of America is actively engaging with capital markets and is prepared to issue new debt. This could be to refinance existing debt that is coming due, to fund new business initiatives, or simply to maintain a healthy balance sheet. One key takeaway is the sheer variety of financial instruments Bank of America has available for investors. From common stock to many different flavors of preferred stock and various notes, they offer a wide spectrum of investment options. This diversity allows them to tap into different investor pools and manage their funding needs effectively. Looking at the date, the 16th of October 2025, it suggests this is very current activity. Companies don't typically file these kinds of legal validation documents unless they are actively in the process of issuing or have just issued these securities. In terms of risks and opportunities for Bank of America, the primary risk associated with issuing debt is interest rate risk. If interest rates rise significantly, the cost of borrowing more money will go up, impacting their profitability. The opportunity, of course, is that by successfully issuing these notes, they secure the capital needed to generate returns that exceed their borrowing costs. This flexibility in funding is crucial for a bank's business model. So as a wrap-up, this filing is tea about a sudden boom or a major crisis. It is a piece of the puzzle that shows Bank of America is actively managing its financing and legal structures. They are continuing to make use of registered debt instruments to fund their operations. It's a sign of continued activity in their capital markets operations. Alright, that's our decode of this particular Bank of America document. What's your take on these kinds of procedural filings? Do they tell you anything about the company's strategy? Let us know in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more corporate insights. And don't forget to join our thriving community over on Discord, linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.